Welcome back, everyone, to Next Level Trade. I, of course, am David Thacker, Director of Strategic Engagement at Kansas Global Trade Services, and joining me is Brett Silvers. Brett, thanks for being here. It's good to have you.
Very happy to be here, David.
So, like we've said before, the webinar is being recorded. If you want to rewatch it, share it with somebody. The link will be sent to you. If you have questions, put them in the Q&A box. We have someone on staff that's just monitoring that. And instead of taking up our limited 30 minutes to answer individual questions, we will be sending the answers to you afterwards on an individual basis. So fill up the question and answer box, chat, whatever. If you have a question, need to know more information, and we'll get back to you as soon as we can. So today we're talking trade financing. Brett, you're the president and CEO of WorldBusiness Capital, and looking at your bio and resume, you've been working in trade finance since before I was born, which ages both of us, maybe unpleasantly. You've seen it all from awards and IPOs, startups, and governments. So 2020, one of the weirdest maybe economic years to date in recent history. What did the tea leaves read for 2021, and what will set apart successful organizations to recovery from the ones that are just meh and mediocre?
Well, I think the very good news is that 2020 is over. So happy New Year, everybody. 2021 is a blank slate for all of us, which I think is a year that will bring very good things. As you would expect, we come into this year with many challenges and many opportunities. The challenges, at some point, the equity markets are going to top up. The debt markets are kind of interesting because the banks are sitting on portfolios that have had some challenges with COVID, so there might be some constrained credit availability. We're going to certainly expect greater regulation, maybe higher taxes impacting some sectors. But the good news is that we're Americans. So if you're an American, the opportunities always outweigh the challenges. And I see a couple of good things coming into this year as well. We've got the North American Trade Agreement now signed, ready to go, implemented. We are seeing very active continuing interest in foreign companies investing in the United States. The government policies that are coming will certainly benefit certain sectors like infrastructure and renewables. So I think 2021 is definitely a year when businesses need to think proactively about their business. Grandpa always said, you make money when times are bad, not when they're good. So this is a year when we can all look forward and hopefully make some money.
And getting to the core of that, it's going to be companies that are proactive, that are pushing forward, right? Not the ones who are sitting back and doing things how it's always been done or waiting for just the right time to emerge.
That's absolutely right.
So we're talking about companies involved in international trade, which is the focus of this show, this series. How does financing or the lack of it, access to capital, affect or deter companies from making those proactive moves?
Well, that's a very interesting question because financing, of course, is key, and I'll get to that in just a minute. But to set the table a little bit more for this, there are a couple of things that companies need to think about more globally. No matter how challenging business conditions are, every business really has to be thinking about their next move. No matter how bad things might get, the next move and where to invest, new products, new geographies, absolutely critical. Before you get to the point of thinking about financing, of course, a good business has to have its leadership team intact, and those leaders must have complementary skills. So it's not enough to be a good risk manager. You have to have people who are expert in business development and marketing and financing, of course. In terms of financing, it's always very important to have diversified financing, and we're going to touch on that during the course of this discussion, David. You need financing to maintain your current operation, but you also have to make sure that you have your financing lined up for the things that you're investing in. And then, of course, every business has setbacks, It could be that you're down a certain path with financing, but I've learned over all of these years through thick and through thin, you basically only have 48 hours to feel sorry for yourself. So you have to get back, get on the offense, and start implementing your plan. Now, to begin to address the question about financing it and why it's so critically important. Obviously, for most businesses, it's not going to be efficient to execute an investment plan that is supported only by cash that's on the balance sheet of the business. Why would you do that, particularly if you have investment projects that can yield a return for your business? So really, that's the core of why financing, external financing, whether it's debt or equity, is so important. You're not going to limit yourself to just the resources that you have in your wallet at a given time. The second thing is that capital investments these days are quite expensive. You know, think in terms of a manufacturer needing to invest in state-of-the-art equipment, new cutting-edge machine tools or something like that, or a company that for the first time is setting up national or international distribution. This is a very, very expensive proposition. So that's why financing and availability of financing is so critical for a business to move forward. Leveraging a business's existing resources also very important. We're going to get to, and I think you had mentioned there was a question out there about debt versus equity financing, which we can talk to. But leveraging an outside investment, if you do it carefully and you do it with a very good plan, even if it's more or less a startup, you can generally leverage 3-to-1 reasonably for the equity investment that you have, and then draw resources from outside to leverage that investment, so that you're really getting quite a bit of firepower in the financing that you bring into a business. In terms, and I think that the next couple of points speak to the laying the groundwork for actually how you obtain the financing. One of the things that we tell businesses that are growing quickly and have ambitious plans is to invest early in upgrading the quality of the financial reporting that they're getting from their accounting firm. You'd be surprised, David, how much pushback there is from companies that say, my uncle's been doing the books for this business. There's no reason to upgrade, to invest all the money that you need to get a review quality financial statement or an audit. But that's money, it's an investment, if you will, that is well spent. That a company that will work with an accounting firm early to produce high quality financial statements is going to be way ahead of the curve when they start to talk to financing sources, whether it's banks or equity investors. It's also very important that when the time comes for a business to talk to a financing source, that they go to financial institutions that are familiar with their market and or with their product. That if you're in manufacturing, you want to talk to lenders and equity investors that are familiar with that sector. Same thing with agribusiness, same thing with most technology sectors. So work with financial institutions that know your business. And then the other point, and I would say this is a very sincere plug for Kansas Global, is that when you're getting started with a new endeavor and you're talking about making a significant capital investment, it's always very, very good to have a professional advisor on your team for a couple of reasons. It makes the life of the lender that you're dealing with or the equity investor much easier if you have worked with a professional advisory firm that can guide you through the development of a business plan, guide you on what the marketing channels for your business might be. So that's a little bit of the groundwork that I would suggest.
And all of this is guiding and the strategy behind how a company finds financing that's a right fit, because it's not just the access to the money, but there's also, you talked about working with someone who knows the industry, working with someone who knows what your intentions are, how your company is run. And that's about finding the financing that not only fits in terms of a dollar amount, but fits in terms of business strategy. What are the drawbacks? What are the disadvantages when you get the money, but you don't have a lender or a program that fits? What are the rubs that occur?
Well, so the question is, once you get the money and you don't have your direction well set, well, the easy answer, I guess, is that you have a lender that's not too happy and an equity investor that's not too happy. But in reality, what you have not done is accomplish the objectives that you've set out for the business. So I think your point is very, very well taken. It's not just enough to have access to the capital, but have access to the right kind of capital for you to execute your plan. When we had spoken earlier, David, I think you had mentioned that giving an example or two would be very helpful.
Yes, please.
To sort of illustrate the point. So I'll tell you the story that a number of my colleagues who I know are participating on this call, they know the story quite well. One of my favorite borrowers of all time is a company that's still in business. It's an Indian manufacturer of packaged food called Preferred Brands, doing business as Tasty Bite. So across the United States, in Canada, in Australia, if you go to Costco, if you go to Whole Foods, you'll see Tasty Bite in nice bright colored packages. I was giving a presentation to an investment banking group in New York. This could be about 20 years ago, 15, 20 years ago, about what we did in terms of the kind of financing that we provide. My very short presentation was over. I went to the elevator of the building, and one of the investment bankers literally chased me out to the elevator and said, "We got this $5 million a year manufacturer. It's got production facilities in India. It's based in the United States. They have distribution all over the place. They only do $5 million a year in revenue, but they're looking for money to grow their business." So we have talked to traditional financing sources that said, a $5 million a year multinational, that's very interesting, that needs money in at least 5 different jurisdictions. So to your point, if they had gone to more traditional sources of financing, it might have addressed one need in one location, but not the global need of the business to really expand and capitalize on their market potential. So in our case, to make a long story short, we did 3 rounds of financing over a period of probably 8 years or so, totaling about $12 million. It enabled them to raise 2 rounds of private equity. So the debt came first. They attracted equity investment. Make a long story short, they sold the company. I think they sold 70% of the company to a Japanese multinational. They kept 30%. And then a couple of years later, they sold the 30% to Mars Foods for $175 million. So this is a story with a very happy ending because of the right fit of financing to the business plan. And the owners of this small business are now philanthropists. A good story.
That's a great story with of course, a perfect ending, so to speak. But it speaks to the idea of the company having the strategy laid out and then being able to find not just the money, but the money that fits the overall strategy. Like you said at the beginning, you have to work on things internally to be ready to make those moves, both in personnel and in terms of your business plan, generally speaking, and how you're going to make those next moves. Let's talk more specifically on financing for exporters. There's a lot of programs out there. There's a lot of government programs that I am constantly seeing emails come in about promoting this. Exim Bank, SBA. There's a lot of programs out there, and some companies are able to use them really successfully. Others find it difficult and it never seems to fit them. can you go over a few of those programs and maybe some of the flaws that would cause companies to say, yeah, this has never been able to work for me?
Sure, happy to. So our background as a company and the background of many of my colleagues is in government guaranteed lending, not just U.S. government guaranteed lending, but the programs of other countries, and both domestic and international. So we have the scars to show the challenges of various government programs. We know the nuances quite well. So I'll give you an overview, but with specifics. And then if people have questions, of course, we can answer them. We know a great deal about the SBA. We don't currently do SBA lending. We do know a great deal about Exim Bank financing. But what I thought I would do is give a very quick tour of some of the lesser known programs that are quite accessible and provide value propositions to borrowers that they may not be aware of, and in some cases can backfill some of the needs that go unmet by Exim Bank and SBA, if that makes sense.
Sure.
So one program is the U.S. Department of Agriculture Business and Industry Program. Now, eyes should not glaze over if you're not in the agricultural sector, because this is a loan guarantee program that has absolutely nothing to do with agriculture, but it is administered by the Department of Agriculture. And it enables a lender like us to get a partial loan guarantee for any sort of business or industrial investment, project, existing business in a qualified geographical area of the United States. The program was originally set up to target industrial development in rural areas, but the reality is that much of suburban, rural America, and even some urban areas qualify for the program. So in making these loans, and we are a lender, we obtain the partial guarantee through this program, it enables us to lend long-term to a business, and specific to exports, what we can do is lend to a U.S. company to expand their export capacity, build a warehouse, build a factory, buy equipment, even if not all of it is related to the export, as long as it is building export capacity. So it's like a large version of the SBA programs. It's also good for companies that are reshoring, that are facing import competition. It's a very good domestic loan guarantee program. And to some extent, because we can provide working capital under this program to the borrower, it might help pick up the specific export working capital needs that might be harder to access with the SBA program. Very quickly, this program that I just mentioned is also very good if an American company or project is attracting foreign investment, a foreign investor. We can help leverage that foreign investment. If somebody in the United States is doing a joint venture, if they're selling a good portion of their interest to a foreign company, we can lend to help that investment in a way that's not possible under some of the other government programs. Now, the Exim Bank medium-term program, I know there were some questions about short-term financing under Exim. Most of the people on this call would be familiar with the Exim Bank medium-term program. That's where we, as a lender, as WBC, will lend to a foreign buyer of, say, U.S. production equipment, agricultural equipment, so on and so forth. We provide the financing to them to buy from the U.S. company. It helps incent the purchase from the United States. The U.S. exporter gets paid in full on shipment. A number of companies sort of take issue with the timeframes that Exim Bank has to approve the guarantee. But here's a little bit of a trick, and this bears watching now that it's 2021 and we have a new administration in Washington. If you are making equipment or selling a technology or selling a service that is something that the agency specifically wants to support because the administration is telling them or encouraging them to do it, those deals always get preferential treatment. So I'm going to guess that anybody who is making a technology or offering a service or making equipment that is environmentally oriented or is food security oriented,
right,
or is medically oriented, and they have a buyer overseas and the buyer needs financing, I think those applications are going to go pretty quickly, provided that the underwriting is all there. So I would say even for that well-known program, let's keep our eyes open to see what the priorities of the administration would be. And then two other things real quick. One is specifically, in your neck of the world and your region, for agricultural equipment exporters, for ag commodities sellers, there are programs that we use to finance overseas ag-related projects. And provided that those projects result in increased agricultural commodity purchases and equipment purchases from the U.S., those projects overseas get the money. So it's a good thing for the U.S. companies to know about. And then we do a lot of financing now for Mexican operations of U.S. middle market companies, including many from the Midwest. And that's a theme that I know you wanted to talk about because more U.S. companies are looking to shift their supply chains from Asia back to the United States. We have the ability to provide very attractive financing to help them do that, both in the U.S. and also in Mexico.
Right. That was one of our topics of conversation because in the last 3 years, and maybe it'll change with the new administration, but there's been a resurgence in reshoring, not just to the U.S., but also across North America, especially into Mexico, with the emergence of USMCA, of supply chains, of facilities that were previously in Southeast Asia.
Yes. So would you like to talk a little bit about the Mexico opportunities that we see?
Let's do that. Yeah, that's good.
Okay. Well, first, I'd like to say that Kansas Global's very own Karen Page, very instrumental in advising the government through her chairpersonship of an important Commerce Department committee, advising the government through the treaty process to make sure ensure that certain provisions as they affect small and mid-sized businesses were heard. And happily, a lot of concerns for middle market U.S. companies did make it into the treaty in terms of intellectual property protection and so on and so forth. So Karen was really very much a leader in that whole process. So needless to say, Mexico, key trade partner of the United States going forward. You put the Mexican and U.S. and Canadian GDPs together, it's the size of China plus Japan plus Germany. So together we are an enormous market. 2019, Mexico displaced China as our largest trade partner. The demographics in Mexico are very favorable, young workforce, pretty technologically astute. So Mexico is open for business, and even President Obrador, who's not necessarily known as a champion of business, was very favorable in sort of the opening remarks for the implementation of the new agreement in July. So there's a lot of favorable things going on in Mexico from a macro standpoint, and that's really only going to continue. Interesting, the Kansas City Southern Railroad, which I suspect you've heard of, that is the major U.S. rail company operation with Mexican connections. They operate the primary rail links with Mexico. Interestingly enough, there was a very aggressive bid in September 20 to take over the Kansas City Southern, and they rejected it, saying the deal was not rich enough. Now, that's the smallest of the major U.S. railroads, and they had a very aggressive takeover bid, and they said it's not enough. So obviously, the market is also valuing the increasing U.S.-Mexico relationship. So now what we can do there is provide financing to a Mexican operation that has a U.S. middle market parent. And we could provide very attractive financing secured only by the Mexican affiliates' assets. And what that does is free up the U.S. companies' existing bank lines and relationships so that they are free to make other investments. So it increases their financing availability, if you will.
So we're nearing the end of our time here, and we've talked about a couple different things. But if you would summarize practical steps for companies to take in preparation for looking for financing, and in terms of what are the key factors they should be thinking about when selecting or choosing financing, what advice would you give them as they want to move forward in 2021?
Well, key thing we had touched on is business plan development and a very clear vision. And this also, by the way, goes for mature companies. So if there's a new initiative, a business plan, an execution plan, a marketing plan, very important. Professionally advised in most cases. And then, of course, the correct financial reporting and quality of financial reporting, very, very important. When you're looking for financing, it's also very important in answering your question, that the financing really line up with the anticipated use of proceeds. So if you have a capital investment project, always a good thing to try to line up financing with a life that matches the projected cash flow of your project. So don't borrow too short if you have a capital financing program. Even if you think you're going to make $1 billion in the second year, reality very often gets in the way, and that doesn't happen. So make sure that the financing is in line with what you're using the proceeds for. Also, to supplement it, make sure that you have the right amount of working capital on hand so that once you have your project up and running, you have the resources necessary to operate it with some margin for error. And then, of course, make sure you have the right, it's like anything else, business, sports, make sure you have the right team around you.
And as we close out, I didn't pay you to talk nice about us, but I know that World Business Capital does provide a few of those things. Can you just give a brief summary of some of the options you offer that might not be on the table otherwise?
So we are a commercial finance company. We're a direct lender. We are regulated by the Department of Banking here in Connecticut, although we don't take deposits. And we are very long-time practitioners in the use of a wide variety of these government loan and insurance programs. So we know the pitfalls, we know the advantages. We have a very long track record of making loans covered in part under a number of these programs. So we know how to interact with the government agencies, how to talk to the right people, what resources are needed. And we're a lender, so hopefully we keep our borrowers shielded as much as possible from dealing with the bureaucracies themselves. So that's what we do. The end of the day, you get one of these deals done. It is a very attractive value proposition in most cases.
Perfect. Well, I had a couple of questions come in. Divyesh, I saw your question. I'll get to you, and we'll send an email to you individually, and as what just came in. But that is all the time we have for today. Brett, thank you so much for your time. Thank you, everyone, for coming. Again, there's a survey afterwards. If you feel compelled to help us out, ahead and answer those questions. You can tune in next week. I'm sitting down with Heather Noggle, and she works on digital strategies for export compliance and documentation, has a really cool tech product that's built for small and medium-sized businesses. And then after that, IP protection. We've got a partner from Australia coming on board later in February. So stay tuned. You don't want to miss it. We'll be sending out registration information and the recording of this webinar to you shortly. So everyone, have a terrific Thursday. Have a terrific rest of your week and a fantastic weekend. Till next time, I'm David Thacker. This is Next Level Trade.